Welcome to Charts Today. My name's David Linton, and today's edition for Monday, the 21st of August, comes to you from London. And we start by looking at currencies, then we'll look at stocks, stock markets, some commodities, and last of all, some tech stocks. So we start with the dollar index. The dollar is just holding the last few weeks here. We see pretty well flatlining around this low 90s level. Is this a bottom? Is this a recovery? Too early to say, really, but the interesting thing is that we are sort of holding these levels. We're back into bearish territory on the short-term chart with a downside target that's not activated. So the dollar is really just teetering along the bottom at the moment. Euro has done the reverse, of course. So here the euro is just flatlining. We're slightly back above the cloud. We do have some downside targets here, so it looks like the euro might be topping. So dollar might be bottoming, euro might be toppling, but the medium and long term picture is still pretty bullish. And we see from this point and figure chart these thrust columns in both directions cancelling each other out. So we've got this fan pattern. So it's just becoming harder to predict the direction of the euro dollar. If we look at Japanese yen, we see the dollar has actually spent the last few days just weakening here. So yen strength coming back to test that April low for the dollar against the yen. Sterling teetering along the bottom against the dollar, sitting below the 129 level. Really testing these levels, and if we look at the against the euro, we see here that we actually did go lower on Friday. We are really just nudging now these new lows. And if we look at the weekly chart, we see here we've got closing lows. So we're closing at the lowest level against the euro for 7 years. Not much longer now, and we would be making new, looking back at the point and figure chart here, 7 year lows. So euro is looking strong against sterling, or sterling looking weak, and we are seeing this downside target of 98.50. That's 10% to sterling being worth less than a euro. So we see here that we are against the Swiss franc bearish as well, downside targets bearish on all three charts, and against the Australian dollar has fallen away quite substantially over the last few months, and that's given us downside targets. We've got this new thrust down from that area on the 60-minute chart. If we make new lows against sterling below 162, then we will activate this downside target into the 150s. Australian dollar strength, basically. Looking at the S&P 500 index, headed lower on Friday, so that is really the end of the week was pretty weak. Tried to recover on Friday morning, we see here, but did just fall away. So we are just seeing inherent weakness. We're still bullish on the medium and long term charts, though. It's just the downside on the short term, potentially 3% downside, which would probably still just keep us 23.48 would just keep us still above the cloud on the lagging line. So the market can take that kind of move and still be bullish in the medium and long term. The Nasdaq 100 not actually quite a bit divergent here against the S&P, not quite making new lows on Friday, but lots of downside targets here on the short-term chart. Again, it would hold its medium and long-term trends with those sell-offs of about 2%. The Dow also short-term bearish. And this market has this index has held it up better than most, and the Russell 2000 is where most of the worry is, because we're bearish on the medium-term chart here. So that just shows us a breadth of market on the US 2000 stocks, that we are just seeing sell-off amongst the smaller caps. The S&P 500 down 0.25% on the future this morning, and the Nasdaq E-mini down 1/3% on the future. So it does suggest the market will start the week opening lower. Footsie 100 index is just testing its lows from last 10 days ago, and the same with the Footsie 250. We're bearish below the cloud, not quite at the low levels we saw, but we are still bearish below the cloud. And these indices, just looking at the Footsie 100 again, just coming below the cloud on the lagging line on the medium-term chart, and on the long-term chart as well, it's just looking a bit bearish. The DAX is bearish below the cloud on the medium term, and looking still pretty bearish short term as well. And the Nikkei we see here is heading lower on that stronger yen, so looking bearish as well. Hang Seng is looking better. We see here it's still looking fairly bullish, short term bearish, and Shanghai actually looking bullish in the short term and wandering out. This has been some long-term worry, but coming now out of the cloud on the long-term weekly chart. So China actually looking better than it has been. The Indian market, the Sensex is bearish below the cloud on the short term, but the medium and long term still looking good. The Australian market is really stuck in this range and is looking slightly bearish short term. Crude jumped on Friday. We're holding on to those gains, so that is just making us look a little bit more bullish here on the long term chart. So crude is just really sitting at this $50 level. WTI much the same thing, so we're just sitting around that level. US nat gas sitting at 290. Bearish on the medium and short-term charts, and copper holding its gains, just coming back today to test again these levels that we saw last week. But copper looking bullish on all three time frames. Taking a quick look at some others, sugar up 2% but still bearish. Wheat bearish on all three time frames, and soybeans looking a bit better short term, but medium and long term still bearish. And corn, much the same picture here, bearish as well. Gold was the real story on Friday. We saw the gold chart leap up to test this 1300 level, and it did activate this upside target, 6% upside of 1367. So we are seeing gold just activating these upside thrust targets. This target on the medium term chart, the downside target, did come off the chart momentarily on Friday, but because we closed back, it stayed there for the day. We now see that we've got 6% upside on gold. We do have a downside target, but we'd need to move below, so let's say below 1280 to activate that. So at the moment, that 1258 is just a counter trend move, and no clear signs yet that it's going to fall that way. Keep an eye on the 1 minute chart. But gold is still holding its long-term position of bullish on the weekly, bullish on the daily, and bullish on the 60-minute. Despite this sell-off on Friday, we are still looking pretty good, and we did activate that target. That means that all those bulls who bought on this short-term move are now confirmed by Friday's move that went higher for the first part of the day. Looking at silver, much the same picture. We've got an upside target of 7%, downside target not activated, so we're more focused on that upside target on the short-term chart. We're not quite as bullish on the medium term. We see here we duck down with pressure here, not looking as bullish as gold. US Treasury yields 2.18%, so we're just back into those teens, 2.18. We've got downside targets 213, 208, 212, 208. So it does look like we're coming back towards this 2 level, as sentiment for the US is that interest rates won't increase again shortly. Looking at Apple, still holding its bullish position, so one of the better looking stocks, and Google still below the cloud, one of the more worrying tech stocks, not yet below on the medium term chart, but quite a few downside targets here as well. And Amazon not looking as good either. Facebook has turned bearish below the cloud, but is just holding this range of about 167, 175. So we are just seeing Facebook in the doldrums there a bit. And Microsoft, much the same. We pulled back on Friday, but still looking bullish on the other time frames. That's it for today. Until tomorrow, happy charting. See you then.